Welcome back to another episode of Singapore's Real Estate Explained, brought to you by the JNA Investments team. And today we're shooting the last video of the year.
Yes, Christmas and wow, it's a very, very busy year. And
Lots of parties.
And this is one of the final video that we hope to end with a bang. That's why this topic is very close to heart. There's a lot of clients asking us, does location really matter? Yeah, this is something that people say, real estate investment is like location. And it's a very common misconception which we would like to run through and to unravel what is the mystery behind investments in real estate.
Does MRT matter? Does being in a mature estate matter? Or, are areas that are, let's say, very far away from MRT, a little bit ulu, do they still make money? That's something that we'll cover today.
Yep. Okay, let's jump into it. But before we start, just some formality. Okay, does I thank all our clients that we have served with over 540 something clients. Our average return is about 19.56%, and it's something that we hope to continue value adding along the way as we improve our investment philosophy. Okay, and next, we also currently hit 145 good reviews, and it's something that is very exciting because it really shows testimony of what we have done is being reflected in our client service. And we're across over 4,100 homes sold at record PSF, where this particular channel called Lock It Series, so do go and watch it, or how do we sell home at record transactions. Okay, and this also adds on to our 500 plus investor client we serve, total of close to 4,600 transactions. So yes, Grace can bring us through what are we going to cover today?
Yeah, so we will touch on the significance on the location towards the investment aspect. How important is location? Does better location give better profits? So we'll go through examples on locations that weren't as good. We'll look at did they perform or did they not perform. We also look at locations that are good and whether they perform or not. And then from there, we will dissect on what are the factors to look out for.
And with this, we'll run through quite a few examples to see does location truly matter.
Yep.
So the first one we have is this condo, very, very popular for those who are already in investment, Hyper Residence. Okay. Fun fact, before I know about this name, I wouldn't even know that this LRT station called Tangam LRT.
You can ask around your friends. How many of you have heard of Tangam LRT?
Yeah, so we ask a client, Hyde Park, they say no. Tangam? No. And this is something that very interesting because this is a place that is really off the radar. It's 4 stops, LRT stops away from Sengkang MRT, not a good location. Even the mall, which is Seletar Mall, you need to take 1 LRT stop down to even go to the mall. So it's not a very, I would say, ideal location. 1,399 units, big development, lots of units. And let's see how it performs.
So normally when this kind of developments launch, right, people will say actually who's going to be staying there? They were thinking, if I buy in, is there going to be a future buyer? So these are some concerns of not so good location developments.
So yes, let's take a look at how it performed. So you can see, in terms of profit margin wise, we highlighted those that are penthouse in red. And it's something very interesting. You notice, right? Most of them all hit plus 200K, but here's some transactions like your 17 December 2020 upon TOP, 200K. Okay, 936 2020 also 227K. If you look at it, it may seem like it is a 3-bedder, but if you really look at the transaction, right, and go and understand the floor plan, this few units, they're actually penthouse for a 2-bedder. That's why you see it's only 200 plus K. And that's why you see 25th floor for some only made 145K. Okay, and one more, 25th floor, this is also a 3-bedder. Okay, a 3-bedder, very interesting. 1130 square feet. Okay, compact 3-bedder with airspace. At the end of the day, it only made 172K. So while others, you can see 1152, 400 plus K, 980, 323K, the 980, 335K. The rest of them with penthouse unit tend to not fetch a high profit margin.
Because you're paying for the airspace, even though the per square feet seems lower.
Correct. And kind of exit usually is slightly tougher. And one more thing to take note is there's another transaction we highlighted that performed lower, which is 9th March 2020. The level 20, 947 square feet unit, it only made 229K, although it's actually a 3-bedder. And one thing that I highlighted very interestingly is
They overpaid.
1,044 per square feet.
When everybody entered 800
to 900 per square feet. So these are things that we notice that, yes, overall all make money, but there are some that doesn't make as much as the other. Okay, but what we need to take note is, okay, in general, Hyper Residence actually did pretty well. They make about 25.38% when they sold in 2020 or 2019 upon TOP. Okay, and after a few years of stagnation, about 2 years, it went up again by about 25%. So there's some things that we notice that what exactly caused Hyde Park to appreciate, although the location is really out of the way. So the question is, what caused Hyde Park residents, which is in a place that is really out of the way, to appreciate in value? So Grace, can you bring us through what truly happened?
Yeah, so I think for Hyde Park, the main reason why it actually went up is because there was a new development called Park Botania that came up. So if you were to turn back in time, you can take a look at the break-even price for Park Botania and their land bid, right? Their break-even was about 953. So you knew that there was a profit margin that developer had to make. They would have to launch at 1,000 plus. So true enough, Park Botania actually launched about 1,003, 1,004. And if you remember how much Hyde Park launched at, it was like 900-ish.
Yes.
And the age gap between both of them is not too big. So when there's about 2 years, they are generally relatively new. So people don't see such a big difference in terms of their pricing. Yeah, so I think that really caused Hyde Park to appreciate. And then you'll see that Hyde Park from about 900 plus per square feet went up to about 1,002 averagely, depending on the size of the unit. So if you look at the prices for Hyde Park and Park Botania on the graph itself, from 2018 all the way to 2024, which is today, that is normally how the prices should be transacting. It means the blue one is Hyde Park. It should always be under Park Botania, which is the newer one.
Yep.
Unless there's something majorly wrong with the development. If not, normally there should be a small price gap. So when you go back in time to when Hyde Park was actually launched and you knew that Park Botania land was coming up, if you notice the gap of 33% between the two developments, you knew that this was an out of norm price gap.
Yes, indeed.
And that you knew that the price gap was actually caught up with Park Botania, which is what happened in this case also.
Yeah. Okay. So when it comes to Hyde Park, okay, it's a location that's very bad. So what we did is we actually compare it to other developments. They launched at the same time in a much better location, more central location.
Next to the MRT.
Next to MRT, which is this place called Sim Urban Oasis.
Yep.
It's much closer to Aljunied MRT. And D14, nearer to city, about 4-5 stops, you can reach even to city centre.
Yeah.
So this itself, okay, it was launched at same timing, okay, close to 2014-2015 period. And what we noticed interestingly, for that of Hyde Park residents, it went up by 25.21% as compared to that of Sims Urban, albeit Sims Urban once again, from 2019 all the way to 2024, where Sims Urban only hitting out 16.17%. And one thing that's very interesting is, after TOP, both Hyde Park and Sims Urban Oasis actually stagnated for 2 years before going up, okay, with one Hyde Park went up by 25% and Sims Urban going up by 16%.
Yep.
Likelihood because of the COVID boom that actually allowed it to appreciate in price. But one thing to notice is both of them actually went up very similar. One is Hyde Park is about 311 per square feet. Sims Urban 257. Okay, but one thing that actually stifled the growth of Sims Urban Oasis, if you notice, is because of your Penrose, which was launched back then close to the 2020 period, which launched at 1,004. And that caused it to 1,004, 1,005. That caused it to stifle the growth of Sims Urban. All right. So let's take a look at a second example. Does location truly matter? So another example we look at is this place called
Nan
Park. Yeah, so this project is really out of the way.
I mean, if you drive, it's pretty convenient.
Yes.
It's quite close to town. It's in RCR. But if you don't drive, there is no MRT. There is no coffee shop. There is not. Okay, there is trees and forests.
Carriage Park. And
It's
also
actually quite a
Biopolis.
nice. It's actually quite a nice location. It's just that it's a bit inconvenient.
Yeah. So in this area, there's really no amenities. 1862 units, big development. Okay, but a lot of people say, wow, location bad, confirm won't make money.
Yeah.
Yeah. And one thing we noticed is Nan Park actually profit close to 692K for a big size unit, the highest floor unit. Okay. And what happened is 936 square feet also made about 500 plus K, which is very interesting because in this kind of project, people always think that bad location, out of the way, don't buy, don't make money, cheap is a value trap. But it's not true because end of the day, it still make this amount of profit.
And you notice that actually the 9363 beta made more than the 4 beta of 1313. Again, back to the entry price because you will see that the 3 beta only bought in about 1,007-ish averagely, and the 4 betas actually bought in about 1,008 plus.
Yes.
So even though they were bigger in size, they paid more, but they didn't profit as much also.
Yes, correct. Because at the end of the day, 2-3 as compared to 2-1, definitely the smaller unit make more. And one more thing to take note is also a quantum, because then 3 beta potentially, people are willing to buy there because of the lower quantum, so they're willing to pay a higher premium, although it seems that PS is higher.
Yeah, so if you look at percentage gains, Nan Park, it's about 19%. So you want to compare with something that launched within that same year, but is at a much better location. Another development that came up was Irwell Hill Residences. So this one is really prime location because it's in District 9. So look at Nan Park and Irwell Hill Residences. You'll notice that launched to TOP, Nan did about 19%, Irwell Hill did about 5.36%. In terms of the per square feet increment, Nan Park increased by about 340 and Irwell Hill increased about 143. So also not true to say that, better locations always do better. Because again, back to entry price, Nan Park, when they first entered, you have to compare them to the RCR new launches. You will see that they actually launched about 1,700 to 1,008. When at that time in 2021, all the new launches in the market for RCR was about 2,100. So there was this gap of about 322, which is quite significant, I would say. It means that, let's say 1,000 square feet, 300 is 300K. So similarly, the RCR region, of course, you cannot always compare like apple to apple, but if you're talking about in RCR, Nan Park had a like 300K advantage. So in today's market for sub-sale, all the other RCR, if they entered like, let's say 2001, they have to exit, let's say 2526. But for Nan, they entered at 1,007-ish. Even if they exit like 2000, 2001, they would have already profited.
Yeah, so there's a safety buffer to make. All right, so next up, example number 3, there's something that happened during the 2018-2019 period. This place called Riverfront. So fun fact, this place is really far from MRT, about 4 to 5 bus stops away. And number of units 1472, lots of unit, TOP recently. And what we noticed is, look at the profit margin they make. A 5-bedder make 850K. A 4-bedder, also a premium one, also make about 810K. Even the 3-bedder for some 1109 square feet also make about 727K. Wow, that is really equivalent to like maybe someone's 10-year worth of income.
And you must understand that their starting was pretty low.
Yes, indeed. Yeah, starting was only, I would say, 1,001 per square feet. So you multiply this, it's only at 1.2, 1.3, now it's at 1.9, 1.8, 1.9 million.
Yeah, so you can calculate what's their down payment versus like the amount of profit they get. Was quite high.
Yes, indeed. And if you look at the overall profit, the percentage is about 26.97%. So in totality, if you notice, Riverfront Residences, you buy a 1109 square feet unit at about $1.3 million. The down payment is about 400K. If you were to make close to 700 plus K, that's almost our returns of 150%.
Yeah.
Plus 150%. And that's something that is very rare to get. Even the whole 4 to 5 year period, that's almost like on average about 20 to 30% ROE per annum. So this is where realistic lies, because if you buy the right entry price, you're able to make, people always say, only make 26.97%. But forget that there's a loan component that you are loaning. So your down payment that you make, anything that you make in terms of gross profit, net of all the costing, that will really be the returns you're looking at, of combined 20 to 30% per annum. And if you rewind back to the 2019 period, at the same time when you buy Riverfront, there's actually another project that is a very good location. This place is called Nan Park, next to Ultra MRT, 774 units, big development. And let's see how it performed, comparatively. So Riverfront will make 25.89% you've seen just now. Nan Park till today, only about 7%. You really want to buy the better units, maybe about up to 12 to 13, and that's about half the percentage gain. So you could have bought a 5-bedder back then over here as compared to a 3-bedder over here, and you still make much more. Yeah. So why is there such a phenomenon? Although good location may matter, but what we notice is what allowed Riverfront to make so much is at Riverfront, if you compare to the resale nearby, the nearest comparison is this place called Kingsford Water Bay. When it launched at 1,003 per square feet, it's exactly the same PSM as a resale. That's almost like 3 to 4 years old. So technically, there should be a premium. They're looking at about 15 to 20%. So that's why when you buy a new launch, you're close to resale price, notice that, hey, this allowed it to have a buffer to grow in value. And the reason why Nan Park did not do as well is because at Nan Park area, there was no new land bits around the area that can really truly benchmark and say that, hey, I'm willing to launch at about 2.7 to 8 per square feet. They can put up the prices. So that's something that in Nan Park itself, you don't see that kind of profit margin. And we launch at 2, 3, 2, 4, people say it's high because there's no higher comparative to compare to.
Yep. Okay, so with that, we've seen how developments in not so good areas actually outperform areas that were very good or more ideal in terms of the connectivity or the amenities. So does that then mean that we shouldn't consider locations that are good? Are there locations that are ideal but still profited? So that's something that we'll be looking at. And what are the factors that they had that allowed them to profit also?
Yes. So first example is this place called Penrose. Penrose actually right above Sims Urban Oasis. Very interesting. So
was an example that we looked at. Yes. Same location, both not too bad location because next to MRT, one didn't perform, one performed but not as well. One really, really performed.
Yeah, so what happened to Penrose? If you notice, Penrose actually located next to PIE, right in the heart of, near to Arjunit, a bit deeper into right beside Sims Urban. And what we noticed is the profit margin, look at it, a 3-bedroom. Now, I haven't even considered 4-bed. 4-bed, no one is selling in that place. 1055 square feet unit. The 3-bedder already makes 770K.
For 4-bedders, I think they bought about 2.1-ish. A lot of them are asking like 2.9 to about 3.2 on
million.
Property Guru.
Yeah, so it passed the 800 plus K profit margin. So what I noticed is even this itself make about close to 700 plus K. And even those are compact layer 936 also make about 500K, even though they are PIE facing, which is facing is very another topic of the day, but we notice that this also is reflected, although the facing is not as good. And if you look at the overview of Sims Urban versus Penrose, you know that while Penrose made about 28.78%, okay, Sims Urban also went up a little bit to slightly slower, about 20%. So why is there such a phenomenon? As mentioned just now, when Penrose launched, it was actually close to the PSF of Sims Urban, which is very rare. And this allows it to have a safety buffer to appreciate. Okay, and with that, this allow your PSF to increase much more as compared to Penrose. Okay, and if you were to look at the comparison between Sims Urban Oasis and Penrose versus the RCR new launch, you notice that back then in 2015, okay, your PSF gap, okay, for your Sims Urban as compared to the RCR new launches back then was only going at about close to 142 per square feet gap, okay, where the average new launch for RCR is going at about 1522. Your Sims Urban Oasis was actually launching at 1380. As compared to that of Penrose, they launched at about 158 per square feet on average. But back then, the RCR launches are going at 1866. The gap is even wider at 278 per
So
square
it's
feet.
very similar to Normanton Park. When we saw Normanton Park was like 700-ish when they launched, and then RCR was like 2001. It was like a 300-ish gap. Penrose was very similar in terms of that gap also.
Yes, indeed. So a wider gap translates to a high profit margin. Okay.
Yep. So the next example I'll look at is Jadescape. Next to Marymount MRT, location also not too bad. You'll see that the profit from when they launched to actually when they TOP is about 33%. So in terms of total profits, you'll see that the 3-bedders made about 400 plus all the way up to about 762K. So again, very similar trend that we're looking on why Jadescape actually performed so well. Because if you go back to when they first launched in 2018, their per square feet was about 1,600-ish. And Skyview, which is at Bishan, one stop away, a slightly older development, was really transacting also about 1,600. So you notice that all these newer developments in areas, they usually should launch at the highest because they're brand new. But you'll notice for those that actually launch very close to the resale prices, they are the ones that really perform well after that.
Yes, indeed.
Okay, so comparing Jadescape prices to RCR prices back then in 2018, you'll notice again, RCR was about 1763 and then Jadescape was about 1669. Of course, you know, like when we're talking about regions, whether it's OCR, RCR, CCR, there are like better RCR locations and not so good RCR. But I think when we look at Jadescape, it's on the better side of the RCR and it's also next to the MRT. So being able to transact under the average, that was, I would say, a plus point that Jadescape have.
And one thing to note is in the 2022-2023 period, when the new land bids that came out, they were close to 2,000 to 2,300 per square feet, now up to 2,500. That also transit to a new benchmark for the PSF for new launch pricing, and that actually pull up the entire gap for Jadescape to rise up to close to 2,200 to 2,300 today.
Yeah. So I think the takeaway from today is that, you know, the location may not be the most important. It also doesn't mean that, you know, we're asking you not to go into good locations. It's just that generally speaking, Singaporeans all love the same few factors that, you know, good location, next to MRT, good schools, mature estate. But we've also seen that, you know, like Jadescape, Penrose, these are developments that had good location, but they still profited because the entry price was right.
Yeah. So at the end of the day, sometimes good location also means a premium is factored in. And sometimes when there's emotions involved, when it's very high in demand, people rush and buy. And we've seen like show flat being packed. Sometimes some buyers may have bought into a project that is overhyped. And that's when they pay the wrong entry price, and that's when they don't make as much profit margin as compared to another place where location is very off the way. Maybe people find it a bit quiet, a little off the grid. But then at the end of the day, because enterprise is right, you're still able to make a profit margin for investments.
It's like in Singapore, regardless of how ulu the location or how inconvenient it is, right, there will still be people staying. So it's always a matter of like, what's the price point that would move that unit?
Yes, indeed. And find an intrinsic value, and from there on determine what exactly is the growth for the price in the next few years.
Yeah. So with that, we come to the end of this video. We hope you got a little bit more insight on, how important location is towards your next investment.
And I hope that this entire analysis will show that the key thing is not about location, but it's really about entry price and finding what exactly is the intrinsic value you should enter for this project and walk-away price such that you'll be able to profit decently in the next 3 to 4 years.
If you want to speak to someone about your investment, what are some of the options that you should consider and what are some factors that we should look out for, you can always reach out to our QR code WhatsApp and someone will reach out to you. With that, this is Grace.
This is Christian.
And we'll see you next time. Bye-bye.
Bye.